Good morning, everyone. Let us welcome and thank the team from Christ University, Bangalore. Uh, they have specially came from Bangalore for making us financially literate today. Uh, let's welcome Dr. Deepika Upadhyay, Associate Professor from Department of Commerce, and Dr. Sarvana Krishnan V, Associate Professor from Department of Commerce. I request Principal Sir Dr. Dheeraj Shah to please come forward and welcome and facilitate both of them. DR Sir, please join. Principal Sir also.
I invite our Honorable Principal Sir to say a few words.
Thank you, Mr. Rajesh. Thank you, Rupinder. And thank you all for joining this program in large numbers. And thank you, Dr. Deepika ji and Dr. Sarvana Krishnan ji, who have traveled from Bangalore, as Rupinder said, to make us financially literate. And we had planned this workshop earlier as well, but because of the Indigo fiasco, they could not travel on that day and we had to cancel and reschedule it. But it's good that we are able to finally make it. And this is under the initiative UDAN we started recently, which is for upskilling, for development, advancement and nurturing. As we know that we are all experts in our respective fields of medicine, चाहे वो मेडिसिन हो, सर्जरी हो, पीडियाट्रिक्स हो, गायनी हो, फिजियोलॉजी हो, फार्माकोलॉजी हो, हम उस पर सब में एक्सपर्ट हैं. लेकिन आजकल के ज़माने में सिर्फ अपने सब्जेक्ट में स्मार्ट होने से काम नहीं चलता है. वी हैव टू बी स्मार्ट, वी हैव टू बी नॉट एक्सपर्ट बट लिटरेट इन अदर फील्ड्स. चाहे वो आर्टिफिशियल इंटेलिजेंस हो, चाहे वो फिनेंशियल लिटरेसी हो, चाहे वो हमारा रूटीन मैनेजमेंट एडमिनिस्ट्रेटिव इश्यूज हो, जैसे कि गवर्नमेंट रूल्स एंड रेगुलेशन हो, चाहे हम और बातें करें तो बहुत सारी ऐसी चीज़ें हैं. जब हम आगे बात करते हैं तो सॉफ्ट स्किल्स की बात करते हैं, लीडरशिप की बात करते हैं, कम्युनिकेशन स्किल्स की बात करते हैं. तो अंडर दिस प्रोग्राम ऑफ उड़ान वी वुड कवर ऑल दीज टॉपिक्स वन बाय वन फॉर आर faculty, for making our faculty the best in the country and our administration the best in the city, if not in the country, and also our students best in the world. तो ये इन ऑब्जेक्टिव से हम चलेंगे. तो इसी ऑब्जेक्टिव के अंदर ये हमने उड़ान प्रोग्राम किया है. एंड क्राइस्ट यूनिवर्सिटी बैंगलोर हैज़ सपोर्टेड दिस प्रोग्राम with all their travel, their stay has been supported by their university itself. And we all know that we all doctors work day and night. We are trained in managing patients, we are trained in their care, we are trained in handling them, but in somewhere in between we do not know how to manage our funds. और फिर हम वही सोचते रहते हैं कि जो हमारे लोग जो मेडिकल में नहीं गए थे वो बहुत अच्छा कर रहे हैं, उनके पास पैसा ज़्यादा है. हम अभी दिल्ली में रहते हैं, घर नहीं खरीद सकते, हम VRS ले लेते हैं, प्राइवेट में चले जाते हैं और कुछ और बस भागने दौड़ने किसी स्टेज पर प्रेशर आता है फैमिली का भी, तो वी बिकम रेस्टलेस. So financial literacy is very important, not only to make us rich. It's not about making somebody wealthy, but it's about empowering us to manage our finances, to provide more security to our funds, more stability to our money, and provide us mental peace. कि हाँ हमारे पास जो है जो हम कमा रहे हैं उसके हिसाब से हमने प्लानिंग कर रखी है, तो हमारा फ्यूचर सिक्योर है, मेडिकल इलनेस हो जाए, एल्डरली हो जाए, तो ये दिस इज़ व्हाट इज़ फाइनेंशियल प्लानिंग. इट इज़ नॉट अबाउट accumulating lot of money, lot of and then you do not know how to it makes the more money may make you more unstable, more insecure and more restless, so you are not able to focus on your work. So we want us to manage our money with peace so that we can focus on our work and we can focus better on our work. So with these objectives, we have organized this workshop. I am sure, I am hopeful that whatever our personal objectives of attending these workshops are fulfilled, and if you want something more about financial literacy or some other expectations besides the content of the workshop, please let me know. We would organize further trainings or further workshops or further sessions to empower you to meet your personal objectives of this training. Thank you so much. Once again, thank you Deepika ji and Sarvana ji for making it to Delhi finally. Thank you so much. So we do not take much of their time and request Rupinder ji to start this workshop.
Good morning, everyone. So, thank you for that warm welcome, Principal Sir, Rupinder Ma'am, and all respected faculty, technical staff, and students. So, without any further ado, I'll just briefly introduce about how do we go about it. So, briefly, let me introduce about my university, the body which has facilitated us to come, travel, empower, enlighten people on financial literacy and many more modules. So we are based in Bangalore and we have several schools under our umbrella. All are mostly in Bangalore, but we have 2 other campuses in Lavasa and Ghaziabad. So, talking about CAFE, we have spearheaded on this, basically this body takes up research-based consultancy on financial investment matters, and we design pedagogy, we design a curriculum for more on this. Sir will be talking because sir is the person heading that department, CAFE. So, these are all our leaders, Vice Chancellor, Pro Vice Chancellor and Registrar, School of Commerce and Accountancy, Tommy Sir, Karthik Sir and Amal Sir. So we'll start with the quote from Warren Buffett. All of you must be aware about him, Warren Buffett. Have you heard about him? He's known for value investing. His guru was Benjamin Graham. The Intelligent Investor is one of the books published. It's a very nice read, and I strongly recommend those books to most of you. You'll enjoy. Not being from finance, it covers all the economic aspect, financial aspect of our day-to-day things. Finance is nothing but common sense. So, I just wanted to have a question round. So, how many of you exactly know if I want to go for a sabbatical today, how long will the current lifestyle, I would be able to survive without any salary or without any kind of incentive or consultation fee and all? Is there any answer? Please feel free. Minimum is 3 months. 6 months. Good, very nice to hear that. So that is what financial liberty comes from. So what is money? I normally tell about money is what money does, and mostly it gives us the liberty to choose what we want to do at that point of time. When we want to hang our boots, when we want to go for a full term, whatever we want, let's say. If I want to go for a full country trip, leaving my job, I should be liberated enough, right? So that liberty should come from my wallet. That liberty should not be, because mostly we end up paying EMIs, paying bills, right? And we end up doing a lot of things which the mental psyche does not support. So for that, enough discipline for investment is required. So it is not about earning, it requires discipline of saving and thus investment. Then this I think everyone will resonate here. We have a herd behavior attitude. Let's say one of my friend has suggested, you go for this, good return is there, and without even analyzing, we end up investing, we end up doing what the relative, friend or anyone has suggested, right? We don't go for analyzing, because all of us have a unique body. So we respond to unique medicine. It's not like a generic blanket prescription is available and it will be accepted by everyone. I have a different thinking, thought process for savings and investment. You might have a different. So we cannot take a suggestion and then replicate in our action, right? So if, let's say, I lack time, I will go for SIP, monthly SIP for mutual fund or ETF. ETF does not take in form of SIP. We need to manually do it every time. But mutual fund and all, we can do monthly SIP, and it depends upon how disciplined we are in our savings. Next is, unfortunately, in medicine, the curriculum, the education is very, very rigorous. So you end up in libraries reading and giving exam more, and you don't have any extra time left so that you can go for what is the fad now, what is more rewarding in terms of investment, right? So that is why you are late on the compounding table. Normally, if you see your own classmate who has started with engineering graduation, they are early onset. They are very early in terms of earning good money. So that is why there is a factual thing that you have to, since you are starting late, you have to put in more savings from your kitty. So there is a number called as financial freedom number. Let's say if I want to retire now, or I want to retire 3 years later, when my son is already in the, let's say in the graduation class, is my current expenses supporting me to retire now? How much money do I need on the day of my retirement so that I'm able to execute whatever I have planned till the point of time I need that? So this financial freedom number is very important for each one of us. We have to determine. Sometimes you might be thinking, you might think about it, what is my own financial freedom number? So this actually the science of investment has given. First is decide your goal. What is your goal? At what age you want this wealth? Right? So if many of us, especially Gen Z, they want to retire early, they want to hang their boots early, they want to go for their own freedom. So this money is required at that point of time. So you have to estimate how much expenditure is at that time you are doing. So adjust it to inflation. Because inflation is a silent machinery which is working every day, every minute. Government may deny, government may say that we don't have enough inflation, but inflation machinery is specifically, if you see currently, As per the authentic data source, it is 6.6%, but we are taking a conservative number here as 8%. So anything which is 100 rupees now, next year it will be into the inflation number. So this is the final step wherein we need this wealth formulation number. Target wealth is equal to annual expense, whatever you need. Annual expense has to be multiplied with the inflation number divided by real rate of return. How much is the rate of return you are earning on your investment? Into 100 you will get. So this money you will need at any point when you want to retire. So you can do your maths and find out what is your target wealth requirement on the day of retirement. I hope it is clear. Any questions? Yes. It will be depending upon how much, let's say, if if the money that you require is more, then it will run into crores, even in millions. Depends upon how well we are, how expensive we are in terms of our expenditure. So why investment planning is crucial for doctors? This is very, very important. You are very analytical. It is without any denial one of the best brains in this country is the medical field, and along with the analytical brain, you people are very, very supportive in terms of the rigor. How much we say it is less, right? So, but you are time poor. You are not able to invest enough time in analyzing, in finding out what is new and what will be supporting you more in terms of your investment, savings, planning, science of investment. Because the world is moving very fast. Now we are not only having fixed, let's say fixed deposit, recurring deposits, so on and so forth. We have so many investment machines which will actually multiply your money, funds at your ease. So you might have been thinking about real estate, that we have missed the bus, but definitely more than real estate, stock market and the industrial machinery will offer. Nowadays actually gold is on fire, but that is because of the geopolitical issue which is happening. Otherwise, anything in terms of multiplying your wealth is slower than what stock market could offer. That we will definitely unclog while talking in our further slides. So awareness of financial tools is very important for your long-term security and better financial planning. So what is saving? Anyone, please feel free to answer. What is saving? How do you interpret saving? I'm not asking you to give me an economic definition of it. What is saving? After meeting your daily expenses, whatever is, yeah, income minus expenses, saving, right? So saving is like somebody has written it, Morgan Housel. I would highly recommend The Psychology of Money. How many of you have read this book, The Psychology of Money? It's a brilliant book, very, very normal way he has actually written that it does not require huge money, huge income to build a large saving. It is only the discipline of savings and investment. So building wealth has very little to do with your income and investment. It has a lot to do with your saving rate. It's a marathon, basically. Marathon does not require you have to run faster, but you have to consistently run for a long period of time. So it is backed by the science of compounding. So need of saving, everyone knows. All of us are doing saving or doing investment for some or the other reason. a reason can be as lame as I want to go for a world tour. The reason can be as basic as I want to fund my child's education, UG, PG, marriage, retirement, building houses, going on vacation, or anything. So that these are the common objective for which we take up savings. We require savings, and saving going into investment. Investment, saving should not be kept it in a drawer. It has to be put under the channels where it has the propensity to multiply. It has the capability to multiply. So investment is nothing but deployment of your money in whatever machinery which you feel that it will multiply more. How well it is, so our forefathers or our grandparents would be very nicely doing it in form of gold. Nothing but purchase a gold jewelry or anything. Kisan Vikas Patra, Indira Vikas Patra, yesteryears. And it was like 5 years and your money will double, right? So all those things were there, but because we had limited numbers and limited savings then, that this was sufficient. But now in the current circumstances, we are flooded with so many schemes, so many avenues wherein we can put money. It is not even, not only real estate, gold, the post office schemes. We have many other sources of investment avenues. So the period depends upon how long you are able to part away from your money. So on day one when you start, don't fail to invest in a scheme called PPF. The most important feature of PPF, it comes under triple E category, exempted. When you invest, then also it is exempted. You earn interest on it, then also, and when you withdraw, that time also it is exempted. So PPF, EPF, EPS, there are so many. We will be talking more about them later on. But for just to give you a brief idea about how investment can be multiplied and gives you financial freedom, that depends upon how disciplined you are in your investment.
Can I ask a few questions before moving on? How many of you actually invest apart from the bank deposits? Just wanted to understand. Yeah, super.
Yes.
That's nice.
What
are the sources do you prefer? PPF, Sukanya Samruddhi, SIP. Okay. How many of you actually invest in direct equity stocks? Quite numbers are there. All right, super. Fine. So how many of you do mutual fund on SIP? Okay. How many of you invest on ETF?
ETF. Exchange
That's
traded
nice.
funds. Very good.
All right,
Wonderful.
super. Okay, so based on that, maybe we can have a discussion. So that's what I was asking. Yeah. Thank you.
So म्यूचुअल फंड एवरीवन इज अवेयर ऑफ. आप लोगों को म्यूचुअल फंड तो पता ही होगा सब लोगों को. ETF क्या है वो भी पता है? ETF नहीं पता है? ओके. सो I'll just brief about how money in your pocket, in your personal wallet becomes savings and goes through investment. What is the government impetus? Why government wants you to invest, and that is why they used to give you a lot of value through ATC. Everyone does your income tax. Till last year, ATC was very important, crucial. It is so if you earn, you have to save and you have to invest. So this money, if it goes into the government account, right? Let's say whatever money I am putting in Sukanya Samriddhi or in PPF or in any of the schemes which is laid down by the government or non-government also, it finally ends up in the machinery, in the channels where the government makes use of it. So let's say the lock-in period is 15 years. PPF का lock-in period कितना होता है? 15 years. ठीक है. 15 years हमारे पास वो पैसा वापस नहीं आता है until unless हम उससे खुद लोन लेना चाहें या withdraw करना चाहें. So in that 15 years, the entire machinery, your money is not with only one system. It is scattered across various systems and for which government needs funding. We need hospitals, we need education institution, we need defense. For that government takes, and that is why you might have seen Nirmala Sitharaman very, very strongly saying 8.2% for Sukanya Samriddhi, because she wants, right? And that number is given prior. It is not given after the expenditure is done. It is given much before when the expense is done. So that is the entire beauty of the entire mechanism. So saving, as long as we save more, capital appreciation will be more, and we will be of getting a better infrastructure. That is the philosophy of savings, investment, capital appreciation, and how the entire machinery, government machinery works, right? So it is not that we invest and the money is with government. No, government also further deploys it for every other purpose, right? So it may be giving you 8.2%, 7.1%, 6.5%, but then it is also earning on the same money, right? So that is how savings become investment, and this is all about the investment roadmap of the country. So why were we underdeveloped 10 years, let's say before 1991? Because people did not have enough avenues to save and invest, and that is why we were underdeveloped. Because we became privatized, we became liberal in terms of a lot of practices, and this is how more and more avenues, more and more opportunities have come to us, right? Next. So time value of money. Have you ever heard about time value of money? Because of inflation, the 100 rupee note that we have, or let's say we had around 10 years back, what was the value of 100 rupees? Let's say my grandfather used to give 500 every time when he used to visit us. Earlier it was 100 rupees, then later on it became 500 rupees, till the time I used to receive it from him. So now 500 is nothing. In the city like Bangalore, you will end up paying, and whatever is, let's say in Banaras, in Allahabad, right? जो भी इनकम हमारे एक अपर क्लास को वो करता है, सिग्निफाई करता है, वो ही अगर आप बैंगलोर में हैं, then you are middle class or lower middle class, because of the cost of living. So we need to understand what is the number which is actually हमारा जो income soak कर रहा है, right? तो उसके लिए हमें और तैयार होना पड़ेगा, because let's say after 10 years, after 15 years, my money which I have accounted for, let's say 1 crore, that financial freedom, वो 1 crore उस समय उसकी क्या वैल्यू होगी, कुछ नहीं पता. USD और INR का comparison आप देख ही रहे, it's 92, right? So in my own lifetime, I've seen the 66, from 66 to it has gone to 92. So it is a true indicator how the value of rupee has fallen in the markets, right? So coming on to time value of money, we calculate time value of money through through future value, present value calculation, and we want to know, by receiving 500 today, what will be the future value of this 500. So let's say you are doing SIP, and SIP amount is 5,000, 10,000. So उसका एक कैलकुलेशन होता है डिस्काउंटेड कैश फ्लो मेथड में. तो हम ये कहते हैं कि कितना होगा फ्यूचर वैल्यू. अगर मैं अपने सुकन्या समृद्धि अकाउंट में पैसा डिपॉजिट कर रही हूँ, अराउंड द लिमिट इज़ 1,50,000. So 1,50,000 for 13 years, how much will I get? That is very easy to calculate on Excel. We can do that for you, and so that you can know how much money you will have at your disposal for your daughters at that point of time. So it is easy, because the science of investment you can calculate. If let's say 1 crore you have at in 2035, this equates to how much money you should be investing now. So that will give you an idea how much should you be investing at the present rate of inflation. So that you must understand. So real rate of return, this is very, very important, We end up understanding that, okay, savings account में तो पैसा है ही है. Savings account में how much is the savings account offers us how much interest? 2.5. 2.5 is 2.5 sacrosanct of inflation is also there. Inflation, I am telling you, it is 8%. So 2.5% savings return versus inflation also. So your real return is negative. Your money, your investment is decaying, right? It is technically not earning anything. So why might as well you should invest somewhere where it should be actually meeting your requirement. So the real return you should always find out, you should beat the inflation plus how much you want to get. So inflation, I normally ask at the time of interviews, is inflation better or deflation better? What is your take on it? Is inflation better or deflation better? Inflation. Any point of time, inflation is better. Why? Because it is an indicator of progression. Right? Our economy is progressing because of Japan. It has reached a plateau. Right? All the developed economies, they have reached a plateau. And they can, that is the theory of foreign institutional investors, FIIs that we call about. Right? तो वो क्या करते हैं, वहाँ से बैंक से पैसा उठाते हैं, उनका रेट ऑफ इंटरेस्ट बहुत नॉमिनल है. वो ऐसे प्रोग्रेसिव इकॉन जो डेवलप कर रही हो, जो दे आर द इकोनॉमीज विच आर ऑफरिंग बेटर रेट ऑफ इंटरेस्ट, यहाँ पे इन्वेस्ट करते हैं इंडियन मार्केट में. तो अगर यहाँ पे उनको 8% 9% रिटर्न मिल रहा है वर्सेस व्हाट दे द लोन दे हैव गॉट, सो दैट इज़ द एंटायर थियरी. इसलिए वो फॉरेन मनी आता है आपके मार्केट में. So FIIs and FDI, difference, are you aware of FDI, FII? Which one? FIIs. FDI and FII. FDI is foreign direct investment and this is done in industry specific. Automobile में आ गया, Ford आ गई आपके पास, Tesla आ गई आपके पास, या अब let's say BMW, उनका डायरेक्ट प्लांट आ गया, यहाँ पे ही वो मैन्युफैक्चर करेंगे, यहाँ पे ही वो सेल करेंगे, राइट? सो इट इज़ नॉट थ्रू योर इंडियन मशीनरी, इट इज़ थ्रू अ फॉरेन इन्वेस्टमेंट हियर. फोर्ड आई थी, फोर्ड ने अपना कह दिया कि हम अपना इंडियन ऑपरेशंस बंद करें, यहाँ सेल नहीं करते बट दे यूज़ इंडियन सॉइल फॉर मैन्युफैक्चरिंग एंड एक्सपोर्ट, राइट? सो FIIs का क्या थियोरी है, वो बहुत वॉलेटाइल होते हैं. आज मार्केट ऊपर है तो आ जाएंगे और कल को मार्केट गिरेगी तो वो यहाँ से एग्जिट भी कर लेंगे. उनके लिए एग्जिट बहुत इजी है, FDI के लिए इजी नहीं है. FDI अगर आ गया है तो लॉन्ग टर्म के लिए वो यहीं रहेगा. दैट इज़ वाई दे रिक्वायर अ लॉट ऑफ मनी टू इन्वेस्ट एंड दैट इज़ वाई दिस इन्वेस्टमेंट इज़ नॉट दैट ईजी. सो FDI coming also is difficult because government approval is required, but exit also is equally or rather more difficult. Right? So it comes in insurance, sectors, education. Now you might have seen a lot of UK universities are opening up. So education as a sector is opening up and that is why FDI in education, FDI in insurance, banking, right? Automobile, nuclear weapons में गवर्नमेंट ने नहीं किया बट उनकी कुछ पैक्ट्स हैं जो इजराइल के साथ हैं, डिफेंस सेटअप में है, राइट? सो FDI हमेशा इंडस्ट्री में आती है. It is not generic. They cannot come to market directly. But FIIs, कोई high net worth individual है, HNI, who is in Dubai, they want to invest in India. They can do that through stock market. This is through FIIs. Foreign institution, they are here only to earn money. Why they are volatile? If there is a regressive growth, if the growth goes down, they are very, very volatile in terms of withdrawing from here and investing elsewhere. That is why our finance minister is very, very impulsive when she says that अभी मार्केट बहुत गिरी थी और काफ़ी FIIs विड्रॉल्स हुए थे. उन्होंने कहा कि हमें आपका पैसा नहीं चाहिए, फॉरेन मनी, हमारे रिटेल इन्वेस्टर्स हमारी मार्केट को ड्राइव करेंगे. बट रिटेल इन्वेस्टर्स भी मार्केट इसलिए ड्राइव कर रहे हैं बिकॉज वी हैव अ लॉट ऑफ चेक्स एंड बैलेंसेज. वी कैन नॉट इन्वेस्ट इन द फॉरेन मार्केट डायरेक्टली विद एंड देर इज़ अ हायर कैप ऑफ $2.5 लाख. उसके बियॉन्ड हम इन्वेस्ट नहीं कर सकते. अगर वो खुल गया तो प्रॉब्ली रिटेल इन्वेस्टर्स भी बाहर की मार्केट एक्सप्लोर करेंगे. So it is, we cannot blame the government, we cannot say that something is wrong. Entire world is under turmoil. Geopolitical crisis has, so many wars are going on, so many commodities are on fire. So definitely we don't have any one reason for what the market is falling. The market is falling, but it is because of endless reasons. We have, I think sir has recently written a paper on geopolitical crisis and the impact on market. It is under review, so we cannot actually tell you the good number of reasons, but definitely we have empirical evidences for which the market can be understood that why it is falling. So inflation, we understand that it is a silent threat, but definitely as a progressive economy, if we are comparing between deflation and inflation, inflation is always better. Because with this your income is also rising. You have better opportunities. You have more number of industries, right? So definitely inflation has to be taken into account when we are actually looking out for investment avenues. Next. So real return, this is what I was some time back talking about. If you are putting your money in savings account, by and large, I have taken a higher number, 3.5% return. After tax, it remains with you as 2.45%. And अगर हमने उसमें inflation लगा दिया, then it is decaying your wealth. Right? I kept on telling people that don't put your money in savings account, or you have to identify how much liquidity you want. That money only should be there. Otherwise, put your money in some avenue which is earning for you more. So gold ETFs, equity is there. Equity requires a lot of analysis, and how do we do that analysis is also available. If you permit, we can actually give you a kind of brief outlook about how to pick stocks, right? So if, for example, let's say the road infrastructure of the country is doing very well. Nitin Gadkari, everyone knows it's we have world-class infrastructure in terms of roads, right? So that is why you may connect it with companies like Ashok Leyland, and these are into like buses and trucks, right? So if these companies will do well, it is your theory that because we have better roads, so the transit will be easier, right? So that is why these companies will technically do well. So upon this, you can take a call, right? USD और INR का difference बहुत ज़्यादा हो गया है. So IT companies by and large they will do well because they are into export of services, right? So TCS, Wipro, Infosys, these companies will do well, right? Because you have deployed your engineers outside, they will earn and they will bring in a lot of foreign money, right? So that is why these companies, you have a reason to believe why these stocks are doing well, right? So that is where you have to pick your stocks religiously. Penny stocks mein mat jaiye. Penny stocks are just for, you cannot say that it is a guaranteed form of better returns. Fixed deposit, nevertheless, it has been regarded as you are getting money in absolute number. I don't deny it is there, but definitely it is also losing your wealth. It is losing, first of all, you lose on the mechanism of compounding also. Compounding, everyone knows what is the difference between simple interest, compounding interest. Anyone? Can one person please tell? Yes, yes. On, correct. So, compounding interest, sir will narrate a very, very interesting story on compounding. Can you come?
Yes. So, this very interesting story about compounding. I don't know how many of you know about it. What is the power of compounding? I was believing in small, maybe in my schools or MBA times. Eighth wonder is Aishwarya Rai. How many of you believe it? I too, yeah. The story also you have heard, okay. So eighth wonder is what Aishwarya Rai is what I heard, but in finance, power of compounding is what eighth wonder. So just we'll take a look of this small story. So there was a king. The king wants to get a good, interesting game from a person. He is giving an open challenge to the villagers. And they came with the open game that game should not be included with any luck. Luck factor should not be there. That is the kind of game the king is wanted. Not football or cricket where a small percentage of luck is there. But when it comes to chess, chess is the only game there is no luck factor at all. So the villager also came up with the chess and king was impressed and he said, you ask whatever you want, I will give you. You ask whatever you want, I will give you. And the villager said, no, I don't want anything. No, I am a king of this kingdom. You ask anything. I have everything in this kingdom. You ask anything, I will give. Then he said, okay, fine, Raja. You give me one rice. You keep it on one first box. Then just double it on the second box. And keep doubling like that for the 64 boxes. Can you imagine what is the number, end of the doubling after 64 box? This is what the number. So this is what power of compounding. So we can't even believe, we cannot even count, so how many trillions of tons of rice he will be getting just by doubling in the chessboard. So that is what compounding. So this compounding is possible only in equity market. Only in equity market. But all of us, we fail to understand that when we wanted to double our money as fast, there is a risk also attached with that. So that is where we have to understand how much we are ready to take a risk and how much is the return we wanted. So this principle or this philosophy is what the entire human nature is also working, right? So when you are operating doing an operation or whatever it is, you know what is the risk you are taking, right? So the same way in finance or investment when it comes, so there also for the return what we are trying to get, what is the risk we are taking? That is very important. So risk and return is what we are imparting into our human body also, even human life also. So the same in finance field also. So very important to understand about the risk and return.
So I'll explain about the tax part of it. LTCG and STCG, short-term capital gains, long-term capital gains. You also might have heard a lot of hue and cry when this long-term capital gain tax was introduced, right? Earlier it was not there. After 2018, it was introduced. So age of your investment determines how much tax you have to pay, how much fraction of your money that you have earned on this investment, how much you have to pay to the government, right? So if your money is in the mutual fund, stock market or anything, what is the age that it should be there so that you can avoid short-term capital gains? It should be more than 1 year. Then only it will be qualified for long-term capital gains, right? Real estate, why it is considered as a soil for a lot of black money? Because over and above the circle rate, we end up paying as black amount, right? Many properties we cannot see also because of the black component. Because all our money, white collar job people, we don't have black money, right? So this money, where will we get and how will we pay is a very big question, right? So that is where equity market and mutual funds and all, you need to be invested for more than 1 year. Real estate and all, more than 2 years, right? So this is where we can determine short-term capital gains and long-term capital gains. Short-term, it is always 20%, 30%, depending upon which asset class have you been invested in. In long-term capital gain, it is 12.5%. Government has cancelled indexation benefit. Last year or last to last year, indexation benefit was given the inflation, right? If you have got a property from your forefathers, in whatever year was it, what was the inflation in that particular year, right? So that would have been calculated and you were given an indexation benefit that has been cancelled now. Now the tax that we have to pay, it has been simplified 12.5% or whatever capital gain you have made, through real estate or any other asset category, right? So this ease was required, and not all properties was khata property, khata A, khata B, right? So it was very difficult to figure out what is the number that we have to give that indexation, because you have to go long way and find out, and it was not easy, right? So this was all about short-term capital gains and long. Indexation is the number. Indexation has all been cancelled. Let's say I have got a property in a small village of Banaras, and it was transferred to me in this particular year, but nobody knows that when was it purchased. Technically it was not purchased at all, right? So in that year, let's say whatever old papers I am able to get, so let's say 1951, उस समय क्या इन्फ्लेशन था, राइट? इन्फ्लेशन उस समय 5 या 2% रहा होगा, 1% रहा होगा. अभी इन्फ्लेशन बहुत ज़्यादा है. तो इन दोनों ईयर्स को हम कंपेयर करते हैं, और इंडेक्सेशन का एक नंबर, वो गवर्नमेंट पेपर्स में होते हैं जनरली, वो नंबर आता है. तो उसका बेनिफिट आपको कैपिटल इन्वेस्टमेंट पे जितना आपको प्रॉफिट हुआ है वो आपका कैंसिल आउट होकर के जो बाकी बचता था वो हम पेमेंट करते थे. तो इंडेक्सेशन वो कैंसिल कर दिए, गवर्नमेंट अब नहीं देती है. अब आपने जिस भी प्रॉपर्टी अपनी बेची है उस पर 12.5% आपको देना है, लॉन्ग टर्म कैपिटल गेन्स.
Basically, ma'am, let's say my forefathers are like that. They purchased some property. What is the value we don't know. Now today you are selling that property. So on what price we have to charge income tax for you? So that we don't know, because purchase price is not known. Purchase price is not known. So their indexation has come
They
into
have
the place.
maybe you have inherited it. How will you calculate tax on it? You have not purchased. Your forefathers also have not purchased. Maybe in some cases forefathers may tell you, in let's say in Bombay and all those cities, but आपको कैसे पता चलेगा उन्होंने किस प्राइस पे inherit किया है?
So
So
it's
it
maybe
was-
just only gift transfer, it has come to you. Now you are selling that and you have to pay a tax. So for that, we have to find out what is the inflation. So they will take the inflation as a old inflation charges they will take, and they'll come up and they will charge taxes on you. That is why it is called as indexation.
वो बेनिफिट अब मिलना बंद हो गया है. दैट इंडेक्सेशन हैज बीन कैंसल्ड बिकॉज
प्रॉपर्टी पे कोई इंडेक्सेशन ऑप्ट कर सकते हो. यू कैन ऑप्ट फॉर इंडेक्सेशन हायर, जैसे आपने भी लिखा है कि हायर टैक्स विद इंडेक्सेशन एंड देन हायर.
लास्ट ईयर गवर्नमेंट हैज कैंसल्ड.
और उसके बाद जितना ही हुआ था उसके बाद तो उन्होंने जो आपने टेबल में भी लिखा है कि और 20% विद इंडेक्सेशन.
But in those cases which is which you have sacrosanct black and white में आपको पता है कि प्रॉपर्टी के गवर्नमेंट ने रेट्स बनाए थे, सेंट्रल गवर्नमेंट ने, वो पेपर्स अब नहीं मिलते हैं, बहुत ही मुश्किल से. सो इंडेक्सेशन बेनिफिट इसीलिए गवर्नमेंट ने कैंसिल कर दिया और बोल दिया कि अब 12.5%, क्योंकि वो भी काफ़ी टैक्सेस के फॉर्म में ज़्यादा था. तो गवर्नमेंट ने क्या कहा कि अब पूरा ही इंडेक्सेशन का कैंसिल कर दिया प्लान. अब हम टैक्स पे करते हैं 12.5%. लेट्स से यू हैव मेड 30 lakhs, राइट? उसका 30 lakhs का 12.5% यू हैव टू पे, राइट? नहीं, equity, government wants you to invest in equity market, and that is why it is giving you a lot of benefits also. या वो सब हट गया. Grandparents के sir is asking the benefit which was given on behalf of indexation, that has been cancelled. Obviously it has been cancelled because a lot of deals was done specifically in the Indian context, in the urban context of it. A lot of black money was circulated. For that you have to make a lot of efforts to find out उसका कितना बेनिफिट, क्या मैथ्स है. और वो जनरली वो खाता वाला ऑफिस जो होता है वहाँ से जाके पता करके फिर हम वो कैलकुलेट करते थे, फिर उसको माइनस करते थे. तो ये सब में बहुत टाइम जाता था, एंड देन इट वाज वेरी कंफ्यूजिंग आल्सो. सो इंडेक्सेशन बेनिफिट्स इट्स नॉट शेयर्स सर विल. mutual funds in equity market? Huh. It is, it, it will be,
So equity share we have a price. So even grandfather purchased also in equity share the
you know
physical
the price,
copy.
right?
The price will be fixed. I mean, purchase price is mentioned. So the equity shares, if let's say my grandfather has bought some company, let's say ACC Cement, and I got the physical shares, I converted that into demat. So now when my grandfather bought, let's say one share he has bought it for 100 rupees. So it is mentioned in the physical share. So my purchase price is known clearly there. So today now I am selling, which is almost now 1400 rupees. So whatever amount I have realized on that, I have to pay income tax.
S- s-
Okay. Mm-hmm. Mm-hmm. Okay. Hmm. Yeah, demat holding, if it is converted, and from the time what is your purchase price? I mean, if it is a grandfather from it has come to you, that is what your question, right?
Indexation benefit is not available for
For
stock
equity.
market.
Now
Full
it is
stop.
stopped. From the current year onwards. it is
See, mutual
closed.
fund and all, it comes under LTCG or STCG, nothing more. It's still there for indexation? For what is your contradiction? Mm-hmm. Hmm. So at whatever price your relative, your grandfather has purchased. Hmm. Hmm. Huh. Yes. Huh. Huh.
Sir, in India, on equity, indexation is removed. Flat 12.5 percentage is that flat tax is being charged. Whatever the capital gains you make.
I think there is a date like this fixed for property as well.
Yes.
It's not like
That is base date has been fixed. Yeah, base date.
1950 something it is mentioned in the government white paper, but for stock market definitely we can on slab we can calculate STCG if it is less than 1 year, long term capital gains if it is more than 24 months, if it is more than 1 year. Mutual fund so is for real estate. 24 months because it is real asset. Stock market it is commercial asset. Grandfathering clause is still applicable in India. 2000,
For financial year 2025-26
it's
on long-term capital gain. It's
okay.
still there.
How much? How much it is there? 12.5. So it is the taxes.
No, the taxes will be on 12.5. But the initial purchase price will not be calculated if I would bought it in say 2007. So it will not be taxed from 2007. It will be taxed from 2018.
18. Yes, yes. Which one? Indexation. Indexation benefit. I will take it up as harvesting scheme, tax harvesting scheme. I'll take the example from that lens now. Let's say I have purchased equity in the year 2007, right? And if I'm selling it in 2026, I will definitely make higher profits. Understood? So I will making higher profits, I have to pay higher taxes. So government enables you with a scheme called harvesting your profit, and you can claim up to 1 lakh, right? per year. So whatever money I have made in the market from 2007 to 2026, I am enabled to sell it today. 1,80,000 का शेयर मैंने बेच दिया और आज ही की डेट में मैंने खरीदा भी, right? So my purchase price in 2007 has changed to today's price. So whatever profits I have made, it has been converted again. I have made it. I have utilized the same funds in buying new funds. But these funds are at today's price. तो जब भी मैं उसे liquidate करूँगी, whenever, let's say 10 years, 20 years later, I don't have to pay that hefty profit. I have kept on harvesting my profit every year. That government has already enabled you. So that only sir is telling, instead of calculating it from that particular 2007, you have to index it from 2018. Am I right? So, property also, but index 2024. So that year has been determined.
If I purchase a property, let's say before July 24, I can still opt whether to go for a 12.5 or go for index.
Whichever is lower, definitely you will. That choice has been given so that you don't lose on the capital benefits of it. Yes. So I hope this indexation problem is solved. Have you understood? Yes, everyone.
It means that we are actually investing this 1 lakh back in the stock market.
Back. You are not allowed to make money. Yes, no. You are disinvesting today, you are investing also. So your money is not going anywhere from the channel. It is still there. But you are harvesting your profit. तो आपका जो परचेज प्राइस वो 2007 नहीं दिखाएगा, आज का दिखाएगा. तो ऑब्वियसली आज से जब ग्रोथ होगी तो उस पर कैपिटल प्रॉफिट हम ले. No, you can. It depends upon your objective. Which scheme have you chosen? Right? I hope I have solved your doubt. Thank you.
So when we invest in a property and then we sell it, so whatever profit we get, there used to be an option of keeping it in some kind of bond so that you
Correct.
don't have to.
It is 54 EC.
Is it still?
Yeah, it is there.
It's there.
54 EC, that is a section. Under that, you can actually invest on infrastructure bonds. So like REC bonds, all that you can invest and you can get a,
That entire money is to be invested or
yes sir,
Only profits.
and profit amount,
Only profits.
capital gains.
सर जिससे अमाउंट पे टैक्स लगा उतना पूरा
बाकी आप यूटिलाइज कर सकते हैं.
टैक्स लगेगा वो पूरा अमाउंट चला जाएगा.
तो जैसे अगर आपने 1 करोड़ की प्रॉपर्टी बेची और उस पर 20 लाख का प्रॉफिट था, 20 लाख पे ही आपको इन्वेस्ट करना है. Yes, you can, yes.
Same way, you do not have to invest in a bond within that year itself. You have a escrow account with the government also where you can keep that money for a particular duration and after that you can withdraw.
Yes. You can keep on withdrawing till the time you realize the, let's say 20 लाख ये है, या मैंने इंफ्रास्ट्रक्चर बॉन्ड में लगा दिया, उस पर मुझे कोई टैक्स.
You can have another special account for that.
It is known as long term capital gain account. आपको एक फाइनेंशियल ईयर तक आप वेट कर सकते हो.
8 years तक हम अपना लॉस भी वो कर सकते हैं. यस, कैरी, हाँ, 8 years तक. जैसे अगर मान लीजिए मैंने लॉस पे बेच दिया तो वो भी गवर्नमेंट हमें एनेबल करती है कि वो हम धीरे धीरे राइट ऑफ कर सके अप टू 8 years. उसको हमें इस साल ही नहीं राइट ऑफ करना है, अगले साल भी कर सकते हैं अप टू 8 years.
So at present date, how much sense does it make to invest in property versus mutual funds? Or some people say that don't invest in property, and every day talk they say sell all of your property, this is a useless investment. What is your take on this? Because we
I also belong to the same category. I don't want to invest in real estate because real estate, first of all, it has a lot of risk, right? And let's say you have invested in Delhi and you have moved out somewhere. That risk is there. लेकिन real estate का जो ये ग्लिटरी पार्ट देखते हैं ना कि ये आज की डेट में इतना वैल्यू हो गया, कल की डेट में इतना ही था, लेकिन उसने ड्यूरेशन में स्टॉक मार्केट उससे ज़्यादा बढ़ चुका है. That we have empirical evidences also. It is not out of thin air we are talking. Right? I hope all of you understand real estate is risky, plus the parcel of money required is very large. Totally. Yes.
That is true.
How
that
much
is true.
money you have? Definitely.
Yeah. That is true.
How much money
Real
you
estate
have?
is not risky. We cannot say like that way. Yeah. So it depends. The investment always it depends on individual and how much money we have and how much we are ready to invest. So for example, if I cannot invest lakhs together, I don't have that much of money, then I am not thinking about real estate. So real estate is about a person who's thinking about, because there is some psychological connection with the real estate. Because you are making something physical property. That is the psychology connection which you have on a real estate. Whereas when it comes to an equity market, you don't belong to owning an asset. But whereas when it comes to an real estate, that pride itself has actually comes up. I mean that you are owning a asset, some psychology factor. These are there. Yeah. So it depends on person to person. How much amount I have, I can choose the product. But what is the return on the investment? That ROI is what important. So when it comes to ROI, maybe the power of compounding, if you see, stock market is better comparing to in real estate. Again, real estate, it depends on the time, depends on which area you invest. So all that is there, and what is the amount you are investing. The more the amount you invest, the more the return you get. That is how the real estate has been in the market. Yes, ma'am.
What is your take on REITs?
Yeah, REITs is another good way of investing in real estate investment trust in India. So in India, there are around 5 companies is being listed in the National Stock Exchange, REIT. So for example, Mindspace is there, then we have Prestige Group is there. So these, when it comes in an NFO, that is new fund offer, maybe that time you can think about it and you can invest. Again, if you are not ready to invest huge amount in the physical real estate, I have only monthly 50,000 where I can invest, and then that time you can think about REIT. It's not that, it's a bad product. REIT is also good. They will pay you good returns. The capital appreciation is also there in REIT. So there are REIT products is also available. Yeah.
Yeah.
Exactly. So REIT, how it works, for example, let's say takes Manita's, Mindspace is a company. So they actually construct one big property, maybe SEC, Special Economic Zone, for all IT companies. So that may be around, let's say 250 acres of building I'm constructing. But I don't have so much of money. What I will do is, I will list it as a REIT, and I will collect money from all of you, and I invest that money back in my office. And whoever is coming and taking the office as a rent or lease, then that REIT, rent and lease amount, I will share it to you as an income. So that is how it works. So instead of I investing a full amount in a big building where I cannot afford, let's say, maybe I can think about REIT as one of the source of income. So that is how the REIT works. Yeah, risk is again, the risk is purely about builder or which company is giving, and whether it is, if let's say if it is a COVID kind of situation, nobody is occupying the building and there is no income at all. So how they will pay to you? So that's the risk. So that is not possible. If something goes on economically way, and that company also cannot pay you any. But capital appreciation can be. Let's say today you bought it at the REIT at 100 rupees, and after 1 year, 2 year, 3 year, maybe it gone to 120 rupees. That is the appreciation you get. That's a capital gain. Yes, exactly.
Yes.
Whatever you earn, you have to pay tax. Come again,
SGBs
ma'am?
have been
Yeah,
SGBs
anymore,
have been
stop.
discontinued. Huh.
Yeah.
That time government wanted to sell its SGB. Now they don't want. So
Sovereign
definitely.
gold bond. So now everything is taxed. There is nothing is zero tax or free tax. Whatever we gain as a salary or as a capital gain, everything we have to pay tax. Those days are over. Now everything we have to pay tax. Yeah, REIT regulated. That is why it is called as Real Estate Infra Fund. So it is under SEBI. So under SEBI only it is listed. Maybe I can show you all that. Yeah.
You might wonder, real estate. Sir, what is real estate for you? What is real estate for you? No, I want to know what from your lens, what is real estate? No, let him. I want to know. Please, sir, help us. I want to drive a discussion out of it, which will be very useful. What is real estate? Because real estate depends upon what do you see. Let's say I want to construct a house. It's a real estate and that is land. I want to buy a land, right? Not a flat. Flat is subject to depreciation. Especially in the urban setup, when you come to Bangalore, Mumbai, Navi Mumbai, right? They are all subject to depreciation. Then, so real estate. So real estate, let's say if you have.
Yeah.
Yeah, you can. Yes. White collar people. हाँ. हाँ. फ्लैट के लिए आप कर सकते हो, बट डेफिनेटली फ्लैट के लिए गवर्नमेंट भी आपको बेनिफिट दे रही है एट टाइम्स ऑफ रजिस्ट्री. हाँ. So it depends upon the growth horizon. कितने समय के लिए आप invested हो, right? हाँ, correct. The आपका हाँ जी. जैसे आपका 10 साल से ज़्यादा invested हो, तो आपके पास टाइम ज़्यादा है उस मनी पे मल्टीप्लाई करने का. Yes. It depends कहाँ आप इन्वेस्ट कर रहे हो, वो रियल एस्टेट मैटर करता है, right?
So, how many of you know about how stock market works and you are really interested to invest in stock market? How many of you want to know how stock market works?
Yes.
All right. So then I will take a small introduction about stock market, then I will get into how to buy stocks and what are the few bit of analysis even with your busy schedule, how we can pick a stock. That is what we are going to see. And then I will cover this REIT, right? So REIT and ETFs, we will keep it at the last, then we will cover about this. So let us take, shall I take? So let us take an example of, let's say I'm manufacturer of chocolate called 5-star. All of you know about, there is a character called Ramesh and Suresh in TV advertisement. So let's say I'm Mr. Ramesh and my friend is Suresh, that is Deepika, right? So we both started together a business called 5-star chocolate and I'm doing this business pretty well and let's say in Delhi I've started and this business is doing well. Let's say I wanted to expand this business. So I invested some money and my friend has also invested some money. We together we started this particular business. Now we wanted to expand this money. What is the first source of money where I can get the money? Where I can get? So apart from friend, maybe family. So friends and families are the first investors for a business. Apart from that, then I can go to the bank. So now let's say I approach a bank. Do you think bank will give us free of cost money? Okay, so definitely interest is there. Apart from that, whatever money I ask, they will give me? No. So they will ask first thing is what is the collateral you are going to give? Without collateral, they are not going to give me any support. So let's say I already have a business and with that collateral I've got money and I've expanded the business. Now from Delhi, let's say entire North India, I'm started doing business. Now this time I wanted to expand this business still further. I want to do pan-India and I wanted to export my chocolates. Now still I required more money. That is, let's say 300 crores is what I required. Now where do I get this money? Exactly. So there are two ways I can raise this money or maybe multiple ways. But these are the two prominent way whereas one is debt market, another one is equity market. So there are other ways where you can actually go to funding from through a venture capital. But venture capital fund only until unless they find the business is unique and they are able to make good business, good money out of that. Until unless they find that, they will not fund it. For example, Flipkart. Even today, Big Millionaire Day has been funded by some venture capitalist, right? So that is not our business. We are talking about a chocolate manufacturing company, how I can scale up to expand my business to export my chocolates. So for that, only way is either debt market or equity market. Let us understand now what is this debt market and what is this equity market. So debt is basically, I come and stand as Ramesh and Suresh, we both, and ask all of you as a general public, see, we are so and so, we are manufacturing 5-star chocolates since so many years. I will give a promissory note to you that I will pay you 10% interest for whatever money you are giving to me for the next 20 years. So that is the debt, debentures, that I will promise to you that you give me money, I will pay you interest. So that becomes a debentures. Whereas equity market works a little different. Now, other way is IPO. So now, I wanted to raise money, Ramesh and Suresh wants to raise money. Instead of asking you all to give money and I will pay you interest, I'm telling, no, you don't give me just money as a lender. You give me money as an owner for this business. So we both are the owners. You also become the part of this particular company. You also become the owner of this company. But only difference is, we are the major holders of this company because we hold this company almost 51% share of this company because we invested that much of amount. Remaining only 49% of money I will raise from all of you. So the 49% of money I'm getting from you, each one of you become an owner of this company, but still the ownership remains only with us, with myself and my friend. So, but you are also called as owner because you also hold a equity share of this particular company. Now, what is the benefit? Why should I buy your company share? That's the obvious question for, why should I buy anybody's company share? So I think in two perspectives as a layman. One is, I wanted to buy a company because I am busy teaching or I am busy doing whatever the profession we are doing. I don't want to start a company or I don't want to start a business. I don't have a business knowledge. I don't know how Infosys Narayana Murthy has started that particular company and today it is called as giant of a IT company in India. We don't know about it. But I wanted to invest in that company, kind of companies where my wealth also can grow. So that is why I invest in equity. So one is, I cannot start a company, but I wanted to become a business person or businessman. So I need to understand that particular business before investing into that particular business. So Infosys, if the company, if you're talking about, we should know what Infosys is doing. Then based on that, we can invest our money into Infosys and the money will grow. Because until unless we don't understand the business, then it is no use of investing in that particular company equity shares. So that is the first reason that why we invest. The second reason is, by investing in others' business, we wanted to make profit, right? It is not just, I have more money, you take and enjoy your company. It's not that way. I wanted to make money. That is why I'm ready to give my money, even though I have little, but I hard earned that money I'm giving to you, not just to you to enjoy. I also want return. That is another reason why we are investing in equity. So these are the two reasons. Majorly we look why we have to invest in equity market. Now, so
Have you understood the theory behind companies? The organic method, why an investor, as an investor, you should be investing? Because you do analysis, because you understood that Narayana Murthy has started a company or let's say DMart. DMart when it went for IPO, at what price was it listed for? Now the contemplation is Zepto will be going for IPO. IPO is nothing else but
So that is what IPO, that is initial public offering, we understood. A company first time raising money from all of you or the general public is called as IPO. So we can invest in even IPO also, and we can invest in the secondary market also. So investing in IPO, again for that required a demat account. So all of you know about demat account? Should I explain about what is demat? So what is demat? Demat is basically a dematerialization account. So the meaning of dematerialization is because those days we are supposed to get only physical certificate. Let's say if you bought a company share of Ramesh and Suresh, the company is 5-star chocolate. So you get a share. The share is what? Equity share. You get in a certificate format. That so and so bought 100 shares of 5-star company for this price. That is the physical certificate you get. This is what my grandfather those days they were getting. But after 1993, no physical certificate. Everything has been converted into demat. So everything has to be in electronic format. So whatever shares you wanted to buy and you want to hold, for example, how you have a bank account. In bank account you can hold only money. Like that, this demat account will hold only the equity shares. Or today it has been actually securities. Not only equity shares, you can also keep bonds, you can keep mutual funds, you can keep every financial asset into that. So that is why it is called as demat account. So this has to be opened through a stockbroker. So generally a stockbroker are the intermediaries who are between the stock market and within us. So they also act as an intermediate between stockbroker. They also act as an intermediate between depositories. So what is depositories? This depositories only open the demat account for us. Who are the depository in India? We call that as NSDL and CDSL. NSDL stands for National Security Depository Limited and CDSL stands for Central Security Depository Limited. So these two companies open a demat account for us. On behalf of us, the stockbrokers will open. That is why the stockbrokers also called as depository participants. So they are also called. So who are the stockbrokers? Zerodha, Motilal Oswal, or Anand Rathi, Upstocks, all this. There are again two types of stockbrokers. One is traditional, another one is discount brokers. Discount brokers are today just an app you can open and start trading. That is what discount brokers like Zerodha. They are purely technological company, nothing else. Whereas traditional brokers they support you in all the ways because if you don't have time, companies like Motilal Oswal or Anand Rathi, these are all the traditional brokers even today. They support you in all the formats. So now, let us understand how the next step. Right? So I do. We are not getting from the bank. We are getting from the CDSL. CDSL or NSDL. They are called. So how bank is involved in this is, let's say, HDFC Securities, it's a separate company. It is not like HDFC Bank. HDFC Bank is different, HDFC Securities is different. HDFC Securities as equivalent to Zerodha, as equivalent to Motilal Oswal. So they work is in that way. So they open a demat account for you. So they involve their bank account. So whenever you wanted to open a demat account, compulsory a bank account has to be linked because there are a lot of frauds were happening those days before 1994. You would have heard about Akshat Mehta scam also, right? So those scams, to avoid those scams, they linked number one is bank account. Number two, KYC, that is know your customer. All that Aadhaar card, everything we have to keep on renewing and we have to keep the document. So and mobile number. So to reduce this kind of not illegal transactions, they made all those things. So demat account whenever you open, number one, two accounts will be open. One is demat, which is similar to bank account, only to hold the securities in that account. So like bank account number, here also in demat there will be a number created. Another account will be created which is called as trading account. So what is a trading account? Trading account is whenever you want to sell whatever you bought. So let's say you bought an IPO through IPO shares of 5-star chocolate you bought and you wanted to sell after some time. Then for that you required this trading account. Then only you can participate in the exchange called NSE and BSE. Right? So this is the first primary thing. So we can actually participate in IPO and we can sell. Now let's say after getting money from all of you, I made this company grow bigger and the company is doing better. And now you can see there is one person who is not interested. Maybe he wants to sell this company shares. So let's say madam was asking that after buying this particular company, 5-star chocolate, let's say now I want to sell it. Now how do I sell it? So selling, can you give me, can you ask me, let's say I am Ramesh, can you ask me, take back your share and give me money? Is it possible? Can I give your money back? If somebody is asking, let's say, that I don't want your share, you take back the money, share and give back my money. Is it
There
possible?
has to be a buyer for that.
Okay, but you bought it from me. I'm Ramesh and Suresh. I'm the owner of this company, let's say.
Only you don't want to buy that.
No, what? I only sold to you.
Wait, but you might not want to buy it back. Now you become the buyer. You have to buy that.
Yes, your answer to your question is you can.
All right. Okay.
You're not obliged to buy that. They might not buy it. Then the share price might fall.
Exactly. So why the share price fall?
Because there are no buyers for that. You want to sell, if there are more sellers than the buyers, so demand and supply ratio. That makes the share price go up or down.
So when I bought money, took money from all of you and I started this business. Now, let's say this auditorium is built from your money, correct? Because whatever money I'm taking as a capital, and these are my capital expenditure. I built this office, built this asset, everything from your money. Now suddenly if somebody is asking, please give back my money, I have to remove only the fan and give it because I don't have money. I invested all this money into my business. So I cannot give money back to you as a business owner. Because if I give this money, then there is an asset is coming down in my business. If the asset is coming down in my business, that is giving a wrong signal to other people, not one person. Other people think why suddenly there is asset value is coming down. So there is something wrong in that business. So I don't want to do that. Because if I give this fan also, I don't have money. Remove this fan, I will give for 2,000 rupees you invested. Or I will give some bench to you for the money you invested. I cannot give that because the asset value comes down of my business. If asset value comes down, there is something wrong in my business. So I don't want to encourage this. So now what is the way? What is the way? Exactly. No, not basic, the secondary. So that is where we have something called secondary market. So now, what is secondary market? So you all know that National Stock Exchange and Bombay Stock Exchange, this is called as secondary market. Right? So secondary market is a place where now you can go and you can sell the shares, whatever you bought it from me. So I will not involve because my primary role is what? I know only to manufacture chocolate. That is what I keep doing it. For the money what you invested, for that you get an earnings in the form of dividend that I will give whenever I take profit. So all that I will not take care. I will give it to a third party who is called as investment banker or investment manager. They will take care of on behalf of me and they will connect with you all and they will be doing this. My business is only to manufacture chocolate and I will just keep on exporting that, I will make profits. That is what I do. So now in the secondary market you can actually participate and sell that particular share and you can come out of that shares if you want. You want to buy a new share or additional share, that also you can buy it. So that is why it is called a secondary because it is not the first time the share is being sold. It is multiple times, the second time or whatever the time it is being sold over there.
In government stock market. So what price you want to sell? The current prevailing price. You have to put an order, sell order, and on your app only you have to put the sale order. By the end of the day, you will get a message. If the market is at that point at selling price, the order will be executed. Or you have put a 10 rupees, 20 rupees, 100 rupees high. If the market does not touch that, then the order will not be executed. Right?
So now let us understand how this market is working. We would have seen, maybe from friends and colleagues, people are investing in stock market. People are investing in stock market, how it is working. So we will be wondering how it is. And in TV channel also you would have seen every time the prices keep on changing or the prices keep on going. How it is possible every minute is changing? We don't know. Why it is changing? We don't know. So let us understand why it is changing on every minute and what makes that company to change for every minute. Anybody know about it? Why every minute the prices changes? Demand and supply. That's all. Very simple. Demand and supply. But have you understood in depth what is the demand and supply? Why demand and supply makes a stock to volatile or fluctuate so much that in a minute? Tips on the mobile. Right? Yes. What else can be? Competition. Results. Okay, results will come only 3 months once. Let's say quarterly result is announced. But every minute it is changing. Right? So, let us understand that how this every minute has been changing. To make it little simple, I will take, because I will take all of you to a vegetable market. Right? So, everyone would have been to a vegetable market, and how vegetable market works we all know. So, let's say I asked today only Rupinder ma'am to go to buy some vegetable, let's say carrot in the market and come. So what do you feel if Rupinder ma'am goes there and buy a carrot? Do you think the vegetable market price suddenly will change? No, because every day ma'am is going, or maybe only one person is going, there won't be any changes. But let's say I give all of you in this particular session suddenly going to one particular market and asking for that particular carrot itself. Then there is any different? Yes. So there is a demand suddenly increases. Now the price definitely will go up because the demand of that particular carrot is increasing. Now, so the price will change because everyone is coming and asking for the carrot. And can you imagine, let's say here around 50 people are there. 50 people go to the one counter and ask for the carrot, and the carrot price. Carrot vendor, what he will think? Let's say he is having only 20 kgs and all of you are asking 1 kg. So that's a chance for him. He will start increasing the price. And how fast the price will increase? Because he is looking physically, there are 50 people standing in the queue. Immediately he will tell 1 kg is now 50 rupees or 100 rupees. And 100 rupees means half of the crowd may go. Then remaining half will be. Because still 25 people are there, I have 20 kgs, I can still sell it. Still I am ready to increase by 10 rupees. So 60 rupees I can sell. Still there are people waiting to buy it. So this is how actually a vegetable market works. Now let us understand, there are two situations or scenario for this particular carrot. Let's say you found a worm in the carrot. Then what you will do if you found a worm in a carrot? Do you buy that carrot or not? No. Okay. Anybody buy still that carrot? Still anybody wants to buy that carrot? Yes, sir. Exactly. Right? Yeah. Based on the requirement. If I'm running a hotel business, maybe I will buy. Right? So, if it is for my home, I may not buy. Right? It depends. Correct? Yes. But what is that important thing we have to understand? Carrot has a worm, but what is the depth of the worm? How much the carrot has been rotten, damaged? We don't know. But by looking at that only we can understand. Let's say I can see only one carrot, only one worm in that. Still I buy that particular carrot and I can use it. Because if I found there is a worm and I can tell that person there is a worm, so okay madam, you give me 2 rupees less, no problem. So I can get a cheaper price. This is one way of thinking. But what generally people will think? No, there is a worm, I will not buy. And what will happen? This news, madam will come back to the office. Hey, don't go there. There is a worm in that carrot, and please don't go to that market and buy that carrot. This is the news will keep spreading faster. Then what happens? Nobody will buy this carrot. Price will fall down. This is what actually happens in stock market also. That is just rumors, and the word says what's spreading, and people will just go on that blindly. Because somebody is talking about stock market and somebody is telling, hey, buy that company, this is going to go up. Okay, he is telling, no, he is a good friend of mine, I will also buy. So this is what generally happens in the market. We don't know what is actually the characters, but still, what somebody is telling, we will also react. And this is what our life is also. Somebody is telling and we will keep reacting for that. So, worm is a simple example for a carrot. So like that, even in the stock market for a company, there is a worm. What is that worm? It is an internal problem of the company. You would have heard about Yes Bank recently had a problem. So where, the previous Kapoor, CEO Rana Kapoor passed away, then another, his wife has taken care of the company. Then I have remember, S Bank has been the finest bank, has been got lot of awards for technological bank. And one of the first private technological bank it has been also awarded. So the share price I have seen around 200 rupees, 250 rupees. From there it has gone up to 1500 rupees. From 1500 rupees the share price has fallen because of all this problem to 8 rupees, 6 rupees it has fallen. Now it is trading around 30 rupees. Now it is trading at 30 rupees. After SBI bought 2% of that particular company. So this is a worm. Now we need to understand whether that particular worm is going to eat the entire company, or it is going to just be there for some time, we can clean it. This is the perspective of looking a company. This is very important for all of us to understand. Another thing is, let's say madam is very busy in college and she's going in the evening. When she went to the evening to the market, and that time she found there is a murder or accident near the market, not in the market, near the market. There is a big accident and it is full of chaos, police, a lot of people rush everywhere. So what again, generally a human being will do? Avoid to go to the market. Right? That is what generally we do. Now what will happen to the carrot price? Okay. Only carrot price will fall down? All the vegetable price will fall down. Very simple, right? So all the vegetable price will fall down. Now, can you just connect the same scenario with any other events in stock market where all the prices will fall down? For example, wars, COVID, right? So, recession. So, COVID, when it hit China, that time only Indian stock market reacted. And almost the stock market came down by 13-20%. Then, when India was hit by COVID, what happened? Companies like PVR you all know, that cinema theater, right? It was closed almost for 6 months to 1 year. But during COVID, the share price was keep on going high and high and high, where nobody was going to the theater. So this is what we have to understand. So these are the sentiment which affects the market. So what happens? Now this is the external thing which is affecting the stock market, even though it has not happened during that time, but we already discounted because in China it already happened. So this is how we react. So this is like a human brain, how we will react to different situation. The same way the stock market also will react to different situation. And we need to understand, it's very simple, the stock market, to understand how our life has risk and return. In our life graph, there is ups and downs. The same way the stock market also works. There is nothing different comparing to our life and the stock market. It's about the performance matters. Even after high performance also, sometimes our graph will be low. How our real time life, the same way stock market is also works. I just show you any doubts as of now. Any doubts as of now up to this? So these are the examples I have given. Any doubts as of now? Demat account, any doubts? No doubts. Okay, shall I proceed? Now how to pick? Yes, sir.
It's not a doubt, but it's a comment, because whenever we talk of stock markets, we give examples of the companies. Most of the examples we give is like Infosys, MRF, which have done well. But when we invest, especially in the first market, we do not know much about what will happen to that company. For example, in about 30 years back, I invested 30,000 based on my sister's advice. She was a fresh CA, 30,000 rupees in a company, the first primary market. The shares which cost 10 rupees were being sold for 1,000 rupees, 990 rupees premium, and I invested 300 shares, no? 30 shares, sorry, for 30,000. Now, today's date, I still hold those shares. This is now 300 rupees. 300 rupees. मैं अपने आप बचा के इसलिए रखता हूँ कि अपने आप को डीमोटिवेट करूँ कि स्टॉक में नहीं जाना है, क्योंकि it has gone back to 10 rupees, the original price. So at that time, अगर हम normal compounding भी देखें, it should have become 20-30 lakhs, which is 300 rupees. So at that time, I do not know where to invest. So how to choose at that source, primary market में हम कैसे choose करें ना कि कब क्या होगा, किस में bomb निकलेगा? Yeah, I have my stock मेरे stock में सारे वही हैं, Reliance Power, Sahara, RPL है, Sahara है और ये सब है, ADR Zinc का example था. So I have stopped investing. So I have not closed my Demat account. मैंने वो सब रखा हुआ है कि ये नहीं करना है. So how to get saved from this?
Yes. So that's a very important thing we are going to address, and how do we make sure that our money is not lost on these kind of things. So before getting into that, I just wanted to give you some, this kind of advices that by showing some stocks or maybe, this is how the stock market works, or this is how much returns the stock market can give. How many of you, I know that, let's say, I just wanted all of you to raise hand for a product. How many of you use toothpaste which is called as Colgate? And I can see Colgate, even dentist also coming and giving an advertisement, right? So, yeah. Now you can see majority whoever is sitting here is also using Colgate. If I ask the same question even to a person in a college goers also, if you ask, majority people will say Colgate. And maybe some people will say Pepsodent or Patanjali. There are a few just for other things they will tell. But majority people are telling only Colgate. My grandfather also used Colgate tooth powder. Then there was a Colgate toothpaste. Cibaca is a company which was in India. They bought, Colgate has bought Cibaca, and Colgate launched in India as a bigger toothpaste. And from that time, Cibaca is the company which has given white color tooth powder. From that time, even today, Colgate paste is in white color. But today only they started giving different varieties. Colgate with whatnot, charcoal, lime, salt, everything has come, right? And we all know that Colgate product is, only product is toothpaste. That's the biggest product they have. And you know what is the share price of this company? What is the share price of this company? Just type Colgate. Colgate India. India, third one. Is USD, India. Any idea what is the price? This is the today's price. Today is Friday, and today currently the market is. Can you click on that max, madam? Max, last. Max. 5 years maximum. Not that. Yeah. So, maybe in 2010, 11, 12, 18 also you can see what is the price. It's not about 2,000 rupees. And currently the price is almost reached about 3,000 in 2026 January. Can you move the cursor to the top? Yeah, it is 36,600 is the price of this company. And now it has fallen to 2,000 plus it is the price. So it was above, less than 500, maybe in 2010, 2018 also you can see less than 1,000 rupees. Even it is doubled in just 6 years of time, 6 year or 8 years of time, it is just doubled. So what is that we understood? Whether I have seen anything written below the market capital PE ratio, 52-week low, 52-week high, I have not seen any of these things. I have seen only one thing. What is that company creating an impact in our mindset? This is what I understood. I go on a brand, that is Colgate, how many people are using. I observe this on an everyday basis. This is fact, and there is no denial on this, that Colgate is the only company where in India more than 50% of market shares are there. And this is how I picked this particular company. Do you think if I invest in this company I will be losing my money? Another 10 years, 15 years, 20 years, even then I have to brush my teeth. So I have to use this toothpaste. Whatever happens, we have to do So this is what the company we have to look in. So how I'm looking in, so now let's say, similarly there is a new company has started. You are hoping that in the next 20 years Colgate will go down and that particular company is going to come up, let's say. That is what you are understanding and you wanted to invest in that. Now, that is what will happen. So when you invest in that company, by not investing in other companies, what will happen? When you park all your money in one basket, again this kind of risk is there. So if let's say you have a 1 lakh monthly to invest on investments, do not invest entire money into one place. You need to split that money into different things. So let's say 1 lakh is that you invest to 20,000 rupees on SIP, invest 20,000 rupees on mutual fund, invest 20,000 rupees on ETF, invest remaining in the stock market. In that also, you should not invest one stock. You should again diversify that particular stocks. So what happens, what is the advantage of diversification is, let's say this kind of IPO of failure happens, we may not think that stock market is bad. That is number one. And number two is, one stocks may give you zero return or even, entirely will ripe your money. The entire money will go also. Other 2-3 stocks can lift you up with a higher potential returns. So this is how the stock market has to be, looked into. Not just investing all your money into one basket. That will erode your fund, and we may also tell about the stock market is always bad. Right? So do not do that. You need to think how to invest in the market. So Colgate is one example. Now I'll also, all of you know that Zudio, right? Zudio is everywhere. In Bangalore I can see all these youngsters are only going to Zudio. And I was looking at what is this everywhere. All premium layouts in Bangalore, they started this Zudio. I was wondering how this particular company, who is actually having this Zudio company owner. Then I was searched, then I understood that Tata Group it is. Then Trend is the company, under that only they are manufacturing all this Zudio. Then that time the price was around 3,000 rupees. You can just see the maximum graph for 5 years. You can see 2022, 2023, that is the time where it started picking up. Zudio share was only 700, 800 rupees.
Lockdown period, after that it has picked up.
And went up to 7,200 and currently it is trading around 6,000, 3,779. So even it has gone to the peak of 6,000, but now it is at 3,000 rupees. But still, the company, again Zudio as a company, not only Zudio as a brand, they have many other brands in the Trend as a company. Just what is that we are supposed to understand that it's not about their financial. Financial is, maybe the second extent we will look into. But the simple thing is, what is that company is producing, how long this company is there in the market, whether for the next 10-15 years this company can do the same business or not. If we can understand this concept, then that is the company we are supposed to invest. That's it. Very simple. So I keep looking into even sometimes whatever the medicine I keep buying, I will just look into what company is manufacturing. I will see it is a GK Health Care Limited is producing this particular thing. So Cipla. So whenever I'm buying diabetic medicine for my mother, and I keep looking into what is the company producing all these things. And let's say there is one particular Vildagliptin. What is that, sir? Yeah. So that particular medicine. So there are a lot of companies manufacturing. So which company is manufacturing that particular combination? So I look into that and I will pick the company for that. So that I can invest in that particular. So it's a very simple concept. I don't want to look into any of the financial aspects here. I just look into the product which every day I will use it, which is most used, not only by me, I will see what others also using. Very important, that is important. So based on that, I can easily pick a company and I can invest who can be there for the next 15-20 years. This is the agenda, just look into that. So whatever product I am buying, I will always look into the label, whether it is limited or private. So when you see, for example, you take this Bisleri water bottle, and you can see there is a manufacturer in this. This is manufactured by, I'm not able to see this. Yeah, it's a private limited. So no use, we'll keep it. If it is a limited, one instead of private, if only limited is mentioned, then that is a company listed in the stock market. Private limited, don't, leave it. We don't want that. If it is limited, then it is a listed company in the stock market. Whatever you buy, whatever product you are using, anything, wherever you are purchasing, on everyday basis. So like that, I went to a shop to purchase, let's say, a shoe, and I thought I wanted to buy this particular brand called Red Tape. Then I took the shoe and the box also, and I read the box label. It is manufactured by a company called Mirza International Limited. Then I just checked the price. It was that time 30 rupees. Then I purchased also, because I knew that wearing this shoe, I played football, I played basketball, I played, formal shoe, right? And gave me almost 3 years of life. I know the quality of the shoe, so I purchased. But after this company actually now splitted, because Red Tape is now demerged from Mirza International and separately listed. But you can see in 2008, maximum, can you go to maximum? I bought in 2008, 9, 10, that time. It was around very less price. You can see around 20, 30 rupees. It went up to 300 plus. After that demerger, then the share price actually fall. So now Red Tape is separately listed. You can type Red Tape also.
So, sir, I think next thing that we need to know is when to exit.
Yes. Okay. I'll come to that also. So now Red Tape is 122 rupees. So this is how we can actually pick stocks. It's nothing rocket science. I no need to look into any of the financials of the company. Very simple way to pick a company. Now another example I'll tell you. So this is all example you can think about. This is already done. No, you already know. How do I pick a new company? I'll come to that also. Now let's say everybody wash vessels, right? Using a scrubber we will wash, right? Detergent. Now let's say when it comes to a scrub, which scrub you buy? Scotch-Brite, right? Scotch-Brite is a scrub generally, any supermarket you go, near the billing counter also they will keep. So easy to pick and put it in your basket, right? So that is how we buy the Scotch-Brite. You know which company is producing the Scotch-Brite? 3M India, right? And we all know that whenever we go for a long drive or in Delhi, any traffic signals, you can see there is a blue color board and white color font, or green color board and white color fonts, right? You know, even from 2 kilometer distance, when you put a high beam in the night, it is clearly visible, right? That stickers, who's manufacturing it? 3M India, right? From the Scotch-Brite reflection stickers, then you can also go and make your car super beautiful, polishing, car care, everything is there with 3M, rodent spray, right? So again, if you take the number of patents what 3M is having today, more than 100 in the world, right? More than 100 in the world. Again, what is the price of 3M India today? One share is 34,000 rupees. I still remember when I was a stockbroker, I had a franchisee of Religare Securities in 2009 to 15. I was suggesting my clients, they bought around 2,800 rupees this particular company in 2011, 12, 13. Maximum. Can you come down, madam? Scroll down. Yeah, 2010. Can you scroll to 2010? Yeah. So it was 1,800, 2,000 rupees. This is what I have seen this particular company. And today it is trading at 34,000 rupees. So I don't know anything about the finance of this company. Even though I have done MBA finance, PhD finance, no use. I know only the product of the company, what they are doing, what is the business, why this, from the Post-it. Post-it was also manufactured by 3M India. Post-it, Scotch-Brite to 3M, car cares. Look at the variety of product. Look at the innovation. What is their patents? This is the one thing. It's easy to identify a company. No need to look into a financial, no to go through, balance sheet of the company. No, nothing. This is the first stage of selecting a company. This is the easiest way to pick a company when you understand what you are actually everyday buying. This is what even Warren Buffett say. Warren Buffett says, don't invest in a company where you don't know anything about it. You invest in a company which you are using on everyday basis. So Colgate is a thing where we are using everyday basis. So invest in that kind of company. It's easy for us to understand about the company. If you are not able to understand what is the product they are manufacturing, what is the business they are doing, do not invest in that company. Very simple. When you know about the product, when you know about the business, then you invest in this company. That is how we can make money. So now, do not again invest in one company, just, okay, now 3M India, shall I invest? Shall I invest now in this? Price is very high. How do you say price is very high? Because 34,000. Okay, let's say. Let me compare now. We'll come to your point only. 34,000, whether it is high or, let's say MRF share price. So it is 1,30,000. Okay. Now, which is highest? High price. Whether MRF is high price or 3M India is high price? 3M. Okay. Why do you say 3M? Exactly. Exactly. So this is the next level. Next level is what? How do you say the price is higher? How do you say the price of the company is high? So for that, there are few ratios we have to look into. Now again, for that, we no need to go anywhere to look into their balance sheet, nothing. Just Google it, you can see, go to the Google itself. Yeah, so MRF share, come down. No, this is MRF only. Just scroll down. Yeah, so here you can see the PE ratio, the down market capital PE ratio. So PE ratio means price earning ratio. So what is price earning ratio? It will tell us how much times the share price is trading higher than the face value. How much times the share price for the earnings, it is trading more. This is what it will simply, simple language it will tell. So now you can see PE ratio of this MRF is 29, whereas for 3M India, it is 69. So even though MRF share price is almost 1,29,000 rupees, but still the PE ratio is lesser. That means still the share price can go up. That is the opportunity we can see. But can we conclude on that way? No. We have to see another metric on this. That is called as industry PE. Industry PE means what industry it belongs to. Whether Colgate belongs to FMCG industry, then MRF belongs to tire industry. Now that industry PE is also we have to look. For that, this is a website we can use, screener.in. It's a free website. Everybody can even, my app is also available. We can actually download and use it. So it will give you a lot of data about a company. So now let us type 3M India and you can see 3M India competitors are there. And, but again 3M India is a diversified company. It cannot be classified under this. So let me click on 3M India and also I will type here MRF. Yeah. So now you see MRF industry PE is there 28.3 and the stock PE is 30. 28.3 and stock PE is 30. That means it's easy to understand that industry PE means overall the industry performance of this particular industry is at 28.3, whereas this stock is at 30. That means this stock is already exceeded the industry performance. So now investing in the stock, we may not get much returns. This is one hypothesis. It's not that true always. This is a simple understanding that it may not give us a better returns in the future because industry level is, because industry can always grow better, right? Now currently the industry PE is now, this is the industry PE. So in this sector, this stock has outperformed the industry. So already the industry, this particular company outperformed the industry PE also. So this company has grown better comparing to the other players in this particular industry. So maybe investing in this, we have to think about it. But however, looking at the product and all other things, we have to keep an eye on this company. Whenever there is a fall in the company majorly, that is the time we have to buy it. So for that, you just put a quick alert in your Demat account. whenever the price falls, give me a signal. You can put it and give. You can do your work. Whenever there is a alert comes to your mobile, that time you purchase this company. So what is the price you have to purchase? Just look into this PE. Whenever the price falls down, that is the time you have to purchase. So whenever the share price purchase, automatically the PE is also will come down, because that is a calculation. Just to show the PE formula, Google PE formula, that is price earning ratio. Yeah, first one. So it is the share price divided by earnings per share. Market price share divided by earnings per share. So what is the market price? Market price is the current market price. So that is what the reflection. Whenever the share price falls down, automatically the PE has to come down. That is how the formula it is. So we can actually watch the PE ratio. Very important metric for a stock. But not only PE of the stock, you also have to look into the PE of industry to understand and draw a conclusion. This is very important. So now, when to sell a stock? This is very important, because I also don't know.
Lower or higher to decide?
Which?
PE is lower or higher to decide
Okay.
whether to
That is another important thing. Let us understand, again taking an example of few companies. Let me take a company which is, let's say take Zomato.
As a buyer, we have to target lower PE. If the PE ratio is lower, then we can buy. Rule of thumb, industry does not give any rule of thumb, but we technically see less than 20 or 30 PE ratio is better. But as a seller, if it is a higher PE, it is better for you, you can sell. Depends upon
Okay,
what
maybe I will take Dr. Lal Path Labs. So this is the peer healthcare sector. Maybe all of you may be interesting for this, right? So healthcare sector. So look at this. These are the companies in the healthcare sector: Dr. Lal Path Labs, Vijay Diagnostic, Metropolis Healthcare, Thyrocare, Neprocare, Diagnostic Crescent, Diagnostic 3B. There are a lot of companies, and the current market price is also given. Now let's say if I have to pick some company out of this, according to your experience, you tell me which company I should purchase, because I don't know about the company, how it is working. But all of you know which company, which lab is better, where more customers are going. You all know better. Lal Path Labs. You all know that, because even as a layman, I'm not into the medical field, but layman, I know about Lal Path Labs, because mostly people go there, or maybe the service is better or whatever it is. Now look at this. The current market price of Lal Path Labs is 1,407, and during the COVID time, this Lal Path Lab share price has gone up like anything, because testing is keep on happening. And the PE ratio of this company is 44. Look at the other companies. Neprocare is almost at 79. Can you see Metro? It is 59. Vijaya Diagnostic almost at 64. So all other companies' share price is very high comparing to Lal Path Lab. Because Lal Path Lab recently had some financial issues, that is why the share price has actually gone down. Now let us understand what is the industry PE. Now, yeah, all that average. Yeah. For all the industry, it is same only. So industry PE now it is 35.6, because industry means the entire healthcare industry. So that industry PE is only average is 35 is coming, whereas Lal Path Lab is at 44. Now we can see Vijaya Diagnostic, it's very high. Then other companies also very high. Yeah, Lal Path Labs is also very high, because it is 44. Already industry is only 35. So there are few companies in this particular healthcare industry is outlier. Outlier means they are standing out of the industry. Companies like Lal Path, and then Vijaya Diagnostic, another company, where their PE is all extremely very high, 79, 69 and 44. Whereas the industry PE is only at 35. So we have to identify a company maybe at close to this 35. Now let us see. you can see now, these are the two companies are having future scope, that is, but I never heard about these two companies. How about you all? No. Yes. You heard about this company? Heard about this company? Okay. So how do you feel about this company? What? Upcoming. Okay. So what is your perspective on this company? Whether it will grow further, whether have a scope? Okay. Oh, all right. Super. Right. So these are the understanding about the company. Now I will understand about this. I will go through again this company. Whatever madam has given an input, based on that I will try to. Very good. Which company, ma'am? 3B Black Bio. Okay. All right. Yeah. That's what I'm trying to come. Now, so whether we can buy this company or not. Now let's say there are few people are telling about this 3B Black Bio. Now to understand again further, let me click on this. You can see the stock P is 28, it is good. Then the dividend is fine. Let us understand now. Just I'll scroll down. Yeah. You can see there is already ready-made advantage and disadvantages companies given. Advantages, company has reduced the debt. Debt in the sense, they don't have a debt, the company has more cash now. Company is almost debt-free. That's the biggest news of that particular company. Company has good return on equity track record since 3 years. The ROE is almost 16 point. ROE is return on equity, whatever you invest, 16.8. Then what is the disadvantage? Dividend payout is being least. That is fine. Until unless we get a capital appreciation, we are not worried about dividend yield. So let us now, we'll see what is the profit this company makes. Now this is the next level of understanding about a company. So let me click on this profit and loss. Beautiful. You can see this net profit alone. From the, it is almost for 10 years, it is given 0, 0, 0, 1, 3, 5, 8, 114. 32 again dropped. 114 to suddenly there is a drop. Why there is a sudden increase in that particular year? Let's see which year is that. 114. 2021. COVID. So no problem. But after that you can see consistent increase. 48, 49. So definitely we can think about this company for a longer term investment. If you all know about what product they are doing it, whether the company. So again, don't invest all your money only in this company. If something goes wrong, it becomes like, we found there is a worm in this company, let's say after some time, that worm should not eat entire money. So you diversify your money into different stock. Even tomorrow, if this stock fails, other stocks should be able to give you a good return. So it is like it is always like that only. I don't know how many of you prepared, the way how you wanted to prepare. Today there are a lot of competition exam, NEET and other things. So maybe a student comes to education, he wants to choose whether he wants to go for medical field or engineering or whatever it is. If he is almost determined that I want only medical seat, until unless I get medical seat, I will not quit. I will keep on learning. Let's say even IAS civil service is also like that. So they will try almost 7 years of attempt. After 7 years only they can quit. But always in our mind there will be something called plan B. What is that if I am not here? What I will end up? Right? This is always important, right? So when we are even picking a company, so if this company, we are thinking this prospective of this company for the next 5 years, it's good. But still, if something goes wrong, what will happen to my money? Because my hard-earned money has been invested. So don't invest if, let's say, 1 lakh rupees is there for every month for you to invest. If you're going to buy 25 shares of this company, 25% of money can be invested in this and divide your money into other companies as well. So that is how you can safeguard, and that is the one best way to reduce your risk. Yes, sir.
So that is the best way to reduce your risk. Now, any doubts about picking a company? This is the basic things. We no need to get into a balance sheet of this company. No need to understand about what in TV channel they're telling, what recommendations are keep coming. We no need to worry about it, all these things. Just pick companies based on your understanding is always helps you to get a better returns. I tell this particular company, heard about Marks and Pharma? Anybody suggest this medicines? Marks and Pharma? Okay. This company I bought it at 6 rupees. I personally bought it this company at 6 rupees. Currently it is trading at 165 rupees. Even now I have 200 shares. I bought 1000 shares at 6 rupees and I sold when it become double. Now the selling point. I sold this shares when it become double. But now the share price is at 165. Do I repent? Do I regret why I sold? No. Why I don't want to repent? I don't want to regret. What is my objective? I made a double in a year of time. I invested 6 rupees one share, 1000 shares I bought, which means almost 6000 rupees I invested. And next year, the money has doubled. From 6,000 rupees, it became 13,000 rupees. So I sold 800 shares, expecting the share further can go up. That is why the 200 shares still I kept and sold 800 shares because I don't want to lose my profit. I had a doubt whether it will go further, I don't know. But 800 shares I sold, 200 shares still now I am holding it. But 800 shares I booked within a year. But I am very happy because the profit of what I made is doubled within a 1 year, where I will not get any other investment, even in not even real estate. Right? And real estate problem is we need more money to invest. Another thing is liquidity is a problem, whereas in stock market liquidity is just like that. You don't want today itself you invest and come out. You want it, you can keep it. And whatever money you want, one share also we can buy. Right? Only 165 rupees I can buy. But in real estate the problem is, one is liquidity, because first of all identifying a land, we'll identify. Then there is a problem of legal checking, whether there is all legality, any litigation, all that we have to check. After checking all that, then you pay the advance, then you buy it. So buying process will take at least 2 to 3 months. Once you buy, let's say after 6 months, 1 year you wanted to sell. Again for that you have to find a buyer, seller. For that you have to go to a broker. Broker commission has to be paid, and then you have to sell that. And that again 3 months it will take. So by the time you buy and sell a property, but yes, of course, when it's an ancestral property, very long back you bought and you keep it for your purpose, that is always good. But buying now and selling, it's again depends on person to person. There is always a return, there is always a risk. There is no harm in investing in real estate. It depends on, in Bangalore there is something called BDA, Bangalore Development Authority, where we can buy land in online. In the sense, we have to bid that particular land in the online portal itself. There will be 4, 5 customers are maybe, whoever is interested to buy that particular BDA layout, they will participate in the online and they will purchase. But after purchasing, all the documentation we have to go to the BDA to do the paperwork, all we have to do. That will take at least 1 week of time. After that, selling again, we have to buy the, we have to see the broker, or we have to see the party, then only we can sell it. So it depends on, so if you know how to invest in land and assets, you can choose that. But always you keep investing in equity as well on the sideline. Even 10, 20,000, 30,000 or whatever it is. Whatever the money monthly you can park it in. So that is how you can actually make progressive return instead of at one shot. And again, very important, do not invest all your money when you think market is high. So how do you decide market is high or market is low? That is also another question. We will generally don't know whether is market is high or market is low. Generally, a new investor will make a big mistake there only. We will not know whether market is high or market is low. How do you say, or when do you say market is high? When do you say market is low? We know, we comparing the previous COVID time market is low. But if you ask me, 2008 is what the low, because in 2008 Lehman Brother crisis happened. That is what subprime mortgage crisis happened. So worldwide the markets are fallen, and Sensex has come around 8,000 points. Come to 8,000 points. Today Sensex is trading at, Sensex now value of Sensex is, you can see here, $82,194, where it was 8,000 in 2008, 6,000 in 2008. You can click on maximum and we can check in that also. So you can see 2008, it's showing 9,000. This 5, yeah, but exactly. It has come to 8,000 actually. Now from 8,000 to 82,000. 100 times it's gone. In a year of 25 years. 100 times. Definitely land also would have gone so much in 20 years of time. So it is about how to choose and what to know. Now coming out of the stock, when to sell a stock. I bought, let's say, Marks and Pharma and I sold. Why? Because now there should be a purpose of selling a stock. There should be a purpose of selling stock. For example, I bought a lot of stocks during COVID or after COVID within 3 months. After this, there is a rally. Before rally, I bought a lot of stocks. Let's say I bought a stock IRCTC. You all know IRCTC. And IRCTC is a monopoly business in India. And that is the only company serves tea, chai, to food, everything in the train. And also that is the only platform where I can book my train tickets or whatever it is, right? So it's a monopoly. Absolutely monopoly, nobody else can do that. Now so I bought IRCTC. Now it is currently at 617 rupees. Now let us come down. No, what is the price? Highest price you can see 1,714. Maybe I bought around below 500, around 200, 300 rupees is what I bought. And why I bought? By just understanding about the business. And now can you tell me when should I come out of this business? Or when should I sell my investment? How do I decide that? Okay. So like that, most of the company we will have emotional connect. Whenever you buy a stock, by looking at the returns, we will tell, now I should not buy because I cannot buy at this price, whatever price I bought. This is what will happen to us. Because after 10 years, if let's say you are seeing this company share price, definitely whatever the stocks, I don't want to use definitely, most of the time, whatever the stocks you have bought, they would have gone up very high after 10 years. Because we are all in a developing country, you all know that the country economy is booming and the inflation, purchasing power is increasing. Everything is actually a circle, it is keep on changing, right? It is increasing. So in that manner, I can see if I buy 10 stocks today, after 10 years, this 10 stocks will be in good returns. This is what I can do. But after 10 years or after 5 years, should I sell it or not? This is my question. How do you decide that? Okay. Part book your profit. Why do you want to book profit? Exactly. This is where profit booking happens. Do not book profits if you are a long-term investors. Think about what is that goal you made for investment. So let's say 20 years, 10 years you are investing on particular stock, time duration. For what purpose you made this investment? So if you remember in the first slide we were showing there are 3 things why we make investment. Number 1 is our child education. Number 2 may be education, our education or child education. Number 3 is about marriage. Number 4 is about luxury trips. Number 5 is about luxury cars and bikes. And number 6 about retirement planning. So this is the 6 things of a human. This is why we are actually working, earning, studying, everything, right? These are the 6 things we wanted to satisfy our life. Now, whenever you want to sell your investment, you connect with these 6 things, whether you are achieving any one of this. Just because not any of these things are not clicking out of that, then you should not do it. If anyone, maybe child marriage, that is why I'm selling it. Or I'm selling it for my education, I'm going to do my master's or PG or PhD or whatever it is, then I will take it. If I'm planning it for retirement planning, yes, monthly I wanted a fixed income from my investment, then you do something called a systematic withdrawal plan, where that from your investment you should get your money back, right? These are the ways you can plan it. So do not, until unless there is a worm and the worm is going to erode your entire investment, then you sell it. Then you sell it. If the company is doing well. For example, I still remember my grandfather was working in ACC cement factory and he bought a ACC share at 50 rupees or I don't know. After that Harshad Mehta period, the share price went up to 30,000 rupees. Even that time my grandfather did not sell. But I was not knowing because I was not born at that time. Then, now what happens? Now the share price of ACC is almost at 1,500 rupees. Still now, I left it to my father. My father is having that particular company share and it is still there. It is almost now 40 years old share. But what is the purpose of keeping it? What are we going to get? So one thing is, we have to remember 1,675 rupees. One thing we have to remember, make sure that the money is working for you. The money is working for you. If that money is not working for you, then it is called as debt investment. Then it is called as debt investment. Then no point keeping your money into that investment. So how I make sure that that money is working for me? Number one, I am getting dividend. My father is getting dividend every year. And you can see the dividend yield come down, madam, of this company is 0.45%. So which is, in saving account, even if you keep this money, 2.5% is what we are getting. Here 0.45% I am getting some dividend. And what is the capital appreciation? So even if you take maximum and see on year progression, it is good. Until unless, let's say, my father wants this money and take this money and make it a post office savings scheme, and from there 8% can we work out? Yes, it's possible. So my father is retired. Now I can sell this ACC share for him and I take this money and I can put it in a post office savings scheme where 8% return he can get out of this. Otherwise, this is one way of looking into things. What is the other way? It depends on when to sell. Now I told, because my father is retired, I don't want him to give a more exposure on equity market. That is why I wanted to put his money into a safer investment. So it's about an individual to individual, how we are looking into these things, right? If I'm ready to take risk, still I can hold ACC only for a longer duration. So there are, even in this mutual funds, in equity market also, there are capital protection fund. You don't want to lose your money, but still I wanted some percentage of return. Then you can choose that kind of returns in this. So we have to look into the product to product and we have to choose. A very important thing, ETF. Just I wanted to tell about that and we will conclude. So exchange traded fund.
You want to cover the stock market products also?
No, we will go to the ETF. Go to website, just type ETF. In screener only we can type it. ETF. All the ETFs. So, what is ETF? ETF is, it's like a wonderful product in our country. It is actually a passive investment product. What do you mean by passive investment product? Whereas mutual funds, when you are investing in a mutual fund, all of you know that mutual fund works in a way. Let's say I'm from a company called ICICI Mutual Fund. I am collecting money from all of you, and you are investing in the mutual fund. I, on behalf of you, invest in stock market or different asset classes to generate revenue for you. Do you think I will do this free of cost? No. So I charge something called my charges, and the company also takes money from all of you. So that is the charges there. So that charges is a little bigger comparing to ETF. So here an active person sitting and managing your fund. That is why it is called as active fund. Whereas in passive fund, there is no manager like this. It automatically works according to the market. So there are many ETF in market. One is index ETF. Index ETF in the sense how Nifty is working or how Sensex is going. So Sensex we have seen now 8,000 points to 82,000 points. It has gone up. Now let's say imagine you are investing from that time 2008 to now in Sensex, then your money also grown more than 100 times. 1,000 times is what now grown, right? So this is the return you will get in 20 years of time. So ETF investing always is good, and you can also invest in ETF in SIP method. When you have a demat account, you can invest. Stock SIP is there. In that you can choose ETF. So what are the ETFs are there? You can see there are so many ETFs are there. Small Hang Seng Index is there. But in this, there are few in the ETF you should know. Number one, it's about Nifty ETF. Which company, Nifty Bees is one product which is given by Nippon India. Nippon is a company. Previously it was held by Reliance, and from Reliance Nippon has bought. And Nippon India is having a product called Nifty Bees. Nifty Bees is one product. So I just show you the share. So it is currently 283 rupees. Now you can see this is the growth of this particular, and this if you compare with the Nifty, both are same. So whenever the Nifty index will go up, this also will go up. So it's very simple technology, that is whenever that particular Nifty goes up, here also goes up. When Nifty will go up, whenever Indian market is doing well, whenever Indian economy is doing well, definitely Nifty goes up. That is what I given an example of Sensex from 8,000 to 82,000. Even Nifty also in 2008 it was very low. I remember maybe 1,000 or 2,000 point. Now currently it is trading at 26, right? So this is how this will work. So investing in ETF on a monthly basis, you can see what is the kind of growth. Even though there is a downfall, you can see, but overall there is only gain in this. This is what our country and this is what our economy. So it will even actually only go. That is why I changed my word from definitely to, but it is definitely only, you can see. It is definitely only, but only duration, longer term. Investing today and after you can see there is a drop. In that time I cannot crib that it has gone down, right? Market is always like our life. It will go up, it will fall down. It will go up, it will fall down. But the time when I born, the time now I am, there is a huge difference. That is how the stock market also. It may fall, but there will be a steady growth in our growth of our life, how it is. The same way the stock market also works. So you invest, if you are confused about picking a company, just blindly you can invest on this ETF. So one is suggested, one is Nifty Bees. Nifty Bees will just replicate of Nifty. So whenever the Nifty will go up, here also will go. Now, another fancy thing, because now gold price has gone up, right? Silver price has gone up. And you all know that silver and gold is, now silver is extremely used in industrial production. In China, there are more than gold, they started acquiring silver for, keeping stocks of silver more. Because in solar panel, Samsung started using in mobile manufacturing and all the things only silver. And silver has a better conductor comparing to any other electrical conduction. So silver is widely now used in the market. And you see any news on silver. Again, we have a silver ETF. Can you just type here silver ETF? So I wanted to buy silver, but I don't want to buy a physical silver. Instead of that, I can just buy this silver ETF. So Nippon India Silver ETF, 317 rupees now. So can you click on all? Yes, look at the growth of silver ETF. So again, this is also, you can invest on monthly basis. So we have silver ETF, we have Nifty ETF, and we have gold ETF also. So these three products, you can think about it. And if you are a new investor, you are just now going to begin your investment, maybe these three things you can look into. Then gradually you can start investing in your stock market by picking up companies only which you know better in your field or any other field, but whichever you are looking into on regular basis. So that is how we can start our investment journey. And think about when you want to sell, the selling should be either, number one, that investment is dead, it is not working, then you sell it. Otherwise, you are going to switch your investment, that you are going to take from here and you are going to put into other safer avenue, then you do it. Just because I wanted to book profit, do not book profit. If you book profit, only it will be an expense, because it will come to our bank account, then you will spend that money, it will come. So that is easy to make it. But when you wanted to book profit, it is always think about another investment, then it is easy for you. So that is how you have to book a profit. Dead investment, you book it. You are thinking that the profit is going down, then you sell it. This is how you have to think about it, and you have to book a profit. Any questions? Yes. Yeah. Okay. Yeah. That is very important. That is, for example, again, the two examples you have to remember. One is worm, another one is the murder. Whether murder is not inside the company, it is outside, then it will recover. If the worm is inside the company, how big is that worm? Whether that little bit of understanding we required. That worm is going to eat up your company, then you have to sell it. Or you are clueless about that event. For example, recently Paytm. We are clueless about the company. I know most of us are using Paytm than Google Pay or than any other UPI. Paytm is one of the wide people are using. Any youngsters and any people, they use even investment products also through Paytm. But the share price is falling. It's a failure business model, failure IPO, everything is a problem. But the company share price is falling. We don't know why. So these are the clueless. Now this kind of thing, you should not wait. To safeguard your money, you should sell it. Whenever you see this kind of problem, if you are you are not able to understand that, but you want to save your money, just sell it. Because our money is important, right? What happens to that business, we are not worried. If until unless the business, our money is not growing because of that business, I will come out of that. I don't want to keep it. Yeah. Okay. So reinvesting in multiple times, it's tax terms always, whatever profit you make, you have to pay a tax. So let's say in 1 year in a mutual fund, 1 lakh rupees is exempted. So let's say all the mutual fund, whatever mutual fund, profit, only 1 lakh rupees profit, yeah, 1 lakh 20. Whatever profit I make, it is exempted. Up to more than that, if let's say 2 lakh rupees I made, then 75,000 rupees, for that I will be adding into my income, then I have to pay the tax. That is how it has been calculated. And there will be a long-term capital gains also for that. So whatever we do, whatever now today in country, even 1 rupee coming to our account is a earning. So we have to pay tax. No, it's a pure profit. In mutual funds we are talking about. Stocks, whatever you sell, capital gains, whenever you earn, for that we have to pay income tax. Yes, that is short term. If it is more than 1 year, it is long term capital gains. No, that is for, now it is 20%, right, for 12.5.
Just 12.5 only. Oh, sorry. Short term is more. Short term is more.
Short term is 20%.
Short term is 20%. Long term is 12.5%. Sir. Yeah. Yeah. Any other questions? Any other product questions? Pardon? Post office savings. Yeah, a post office saving scheme, you will not get a certificate now because that Indra Vikas Patra and all it is gone now. Post office, you can have a savings account where your savings account are better than the bank account. And there are other avenues also. Instead of looking into post office and bank account, there is a bond market, like how sovereign bond has been issued by the government. Instead of actually, now it is stopped, but still sovereign bond can be purchased through the open market. In the stock market, we can purchase. So bonds are there, which gives you around 8%, 12%. Only thing we have to look into the risk factor, whether it is a AAA bond. AAA means the rating agency is given good rating. Then this bond can give my money back and it can give me my interest also in regular times. So that kind of bonds we can look. For example, REC, it's a government bond which is floated in the public, which gives almost at 8%. So better than your savings account or post office saving account. So this kind of bonds also you can choose if you are looking for a safer investment. And all these products are available through a stockbroker. Through a stockbroker, you can purchase. The stockbroker also can help you to choose a better one. But again, just don't blindly go on whatever they say, because that is very important. Sir?
Most of the brokers or most of the executives want to sell you the insurance linked kind of products. So how much sense does it make to invest?
So do not invest in a product called ULIP, unit linked insurance plan. They will tell that after 10 years this money will going to be so much. You pay only for 10 years. After that only you will get money back. All these products are useless in our country. Right? ULIP is one of the worst product in our financial services. So do not invest in ULIP. Instead that, you invest monthly SIP on a mutual fund. Even without knowing anything also it will give you good return. But
Question is, now, somebody who's already invested,
okay.
what to do? Should we exit?
Exiting, it will not give you anything. So you wait for that particular period, then at least that 8-9% will work out.
Similarly for LIC, you've made n number of investments in LIC. You know it is dead now. I know it is dead. But what do I do? Should I come out of it and invest it somewhere?
That we have to look into what is the return, what is that you are going to get after 10 years. Now currently what is the thing, how much remaining cash flow you have to transfer. So based on that we have to work out. It's like, let's say you almost completed 60% and above 70%. Then no point you come out of that. So now you started only 20% is done. Remaining 80% cash flow you have to pay. So instead of paying there, can you put that cash flow into somewhere else? It will give you a better return comparing to that. This is what we have to think. So that little workout is required. A good wealth manager can. Maybe you can contact me also.
Why don't you flash your number and email ID?
Ma'am, insurance, any product if you're buying, core insurance you should buy.
That's a pure insurance.
How do you know that?
Don't expect anything back.
See, I didn't know this 5 years back. So now I know it. But what do I do now?
Then you have to wait for that to mature. Otherwise,
Sir will help me out. Please give your number.
Sure. Yes, sir. We can sell before the lock-in period, only in the open market. Same applicable, sir. Yes, sir.
8 years lock-in
If you are selling in the open market, 12.25% after 1 year.
Demat account if it is there, in SGB will be there. So it is dematted. So through that you can sell it, sir. No, that's how the market works, no? So yeah, it is also traded. Thank you very much for the opportunity, and hope we added some value to all of you. Not a boring session, or maybe there is some takeaway from our session. If any feedback, we are ready to take it. Anybody wants to share your feedback, or anybody wants to tell about? Yes, sir.
I have a very strong opinion that traditionally, since ages, we have been focusing on saving, and then whatever we save, we put in investment. I think this is one of the biggest lacuna in our financial work. We never teach our children or anybody how to actually generate income. We are always focusing पैसा बचाओ और उसको invest करो. ठीक है ना? We should be teaching them how to be entrepreneur, how to actually generate income. That focus is sadly missing from all our teachings till now.
So that's a brilliant thing. There is one book called Rich Dad Poor Dad from Naval Diaz.
And
That book is always Rich Dad Poor Dad. That book goes back to he has completed the real estate perspective. And basic principles are
new age schools, B schools are teaching on entrepreneurship. Even doctors can become entrepreneur. So you can open your hospital, you can open your health service company, you can become. So
that is the connection. Now, why I spoke about IPO, where to raise money. So if you think about your business, how to raise money, these are the different ways to connect it. So it's not only about making our money to invest. So how to make your money to work is what it is.
sir, if you have any idea, you can incubate in our, we have incubation center also.
So there is no difference between buying two different exchanges. Like a very simple, you're going to hypermarket, there is a Ayush hypermarket and different market. There is two different markets. So both works according to the SEBI's guidelines. There is no difference between the market. Only difference is BSE started in the Asia's oldest stock exchange. We started in 1875 it started. Whereas Bombay National Stock Exchange started in 1992, and there is a reason why National Stock Exchange has actually given a birth, because of Harshad Mehta scam. That is where NSE has come as a technologically stronger, transparent stock exchange. Then that is the time where Demat account has been introduced, where there is more transparency to be created. There not be any scams and fraud should be allowed, and rigging, insider trading, all that. To avoid all that, they introduced an electronic platform called as National Stock Exchange, where Demat has been introduced that year. So that is the only difference. Yes, sir. Yeah, all the ETF work in the similar way. One thing you just look into, what is the, what is it, ma'am? No, again, high NAV doesn't matter here. So because NAV is all same only. I mean, we cannot have a PE ratio for this mutual fund, ETF. Higher NAV. Oh, that is direct. No, you are telling about. Yeah, NAV is. Yeah, that is true. Yeah, for that there is something called index error. Tracking error is there. That tracking error, wherever it is less, that is the NAV we have to choose. That is a fund we have to use. So that is tracking error. So tracking error you have to check. For example, you can just browse tracking error of ETF. We can search, for example, in Nifty Bees only. Yeah. You can see for Nifty Bees, the tracking error is 0.01%, which is really good. That is why I told blindly you invest on this.
Tracking error is more, that means
Tracking error is more means it is not correlating with the original asset. Original asset is what? Index. So it is not correlating. Here it is, tracking error is very less. So it is almost correlating, almost 99.097%, 99% it is tracking with the original asset. So that is how we have to choose this ETF products. So this is the website. You can just Google it, you will get the tracking error of that particular ETF, you will get that. Thank you for all of you.
On behalf of University College of Medical Sciences, I sincerely thank our trainers, Dr. Deepika and Dr. Sarvana, for conducting informative and practical financial literacy workshop. Your insight has greatly benefited our faculty and staff. Special thanks to Principal Sir for his great vision behind organizing this workshop in the college. I'm also thankful to Deputy Registrar Sir and all the participants for taking out time from their busy schedule for support and cooperation in this program. Thank you, everyone.